Hi, my name's David Paradise. I have here with me Paul Mason, who runs our global small and mid-cap portfolio out of Denver, Colorado. In Australia, we're always trying to find investments like realestate.com, Seek, car sales. However, they are few and far between. However, our global portfolio finds a number of these every year. So over the last 4 years, the portfolio has raised about $650 million, and that 650 has turned into $1.1 billion. They've actually generated over that period of time 18%. So Paul, maybe you could tell us about how you see the near-term future and how stocks have been going.
During our last update, we spoke a lot about deploying more capital into emerging markets, which at this time last year was very much a contrarian call. It turns out, the calendar year to date, 7 of our best 10 performers have been in emerging markets. That is where we're still seeing the most growth in the world, and it's still where we're seeing the most opportunities. These assets are generally exposed to increasing consumer expenditure, so they're branded food groups, or they're a media business, or a cosmetics business. So that's where we are still seeing opportunities, in saying that we're still seeing opportunities in parts of the US as well. So we still continue to believe in running a very concentrated 50 to 60 stock portfolio out of such a large universe of stocks, so we can find cheap businesses that are high quality assets that we want to own for a long period of time.
Could you briefly just touch on maybe 1 or 2 really good quality opportunities that you might see out there?
Yeah, sure. I mean, one of our biggest winners this year is a business called Eros, which is a Bollywood film producer. Very quirky asset. You wouldn't see anything like that in the Australian market. It relisted to the US stock exchange this year. It was on UK in the AIM listing. The US market has a very deep understanding of content businesses, and Eros has developed a large library of Bollywood content, which is now being monetized via subscription businesses in the US. So what we've seen is a large re-rating of this content library, which has been a huge winner for us, and we still think there's upside in that asset.
And so what about some of the exposure to the effect that increased technology has on reducing costs of some of the stocks, and where the opportunities exist in some of the portfolio? It's
certainly out there. I mean, one of our biggest positions, and has been a long-term holding, is a business called Global Payments, which does payment processing. Large tailwind behind it, given cashless payments, and not just via Visa and MasterCard, but now things like Apple Pay. So we do think that technology is and can be disruptive, and it's very hard to access that kind of innovation via Australian listed stocks, but there are opportunities globally, absolutely.
What we see in Australia is that we're running out of opportunities like those, for example, the Seeks, the car sales, but it looks as though the global market for small and mid caps, those opportunities still exist. And not only that, it would appear that this product would also benefit from a weakening currency, which we have a view that the Australian economy is probably in for a bit of a downturn.
Yep.
The American economy is getting strong, which I think you guys feel, and therefore this particular product provides the opportunity to get exposure to a lot of cheap investments.
Yeah, I think you summarised it well. The moves in commodities is clearly not a positive for the Aussie economy, and therefore the Aussie dollar. So we think being an unhedged product right now will give Australians good access to benefit from the devaluation of this currency.
Yeah, right. Thanks very much, Paul.
Sure, thanks.